Today's edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. This is the Markets Club podcast. I'm going to talk about the hogs markets and counting on the cattle markets with Dr. Anderson from Texas A&M. We were talking about the fertilizer markets with Josh Linville from Stonex. We were talking about the commodities markets with Kimmel from agmarkets.net. Here's Dr. Anderson from Texas A&M. I'm going to join our conversation with Dr. Anderson from Texas A&M about the hogs markets and counting on the cattle markets with Dr. Anderson. Hey, Dr. Anderson, how are you? I am
I'm great
pretty
today.
sure that college baseball is being started in College Station.
Well, it sure has. I'm doing pretty great here. This week is spring break here, except for us working people on campus. We're still up here. The students are gone, but I'm here. I
Of
was
course. Dr. Anderson, could you tell our audience on the hogs markets about the supply and demand for right now?
sure. I think as we look at agricultural markets, I think the hog market is one of the more interesting things going on and has been for a couple of years, simply with prices that have not delivered, really great returns. I mean, we can look through much of 2003 and 2004 with some really horrendous financial losses. Um, Yet now we're seeing some higher prices so far this year. Hog prices, I'm looking at Iowa, southern Minnesota carcass base prices. It started out the year about $80 per hundredweight and are now at 90, with a futures market of about $100 this summer. I think there's some opportunity there for some profits to kind of help hog farmers a little bit. Certainly because that has constrained, those losses have constrained the size of our breeding herd, farrowings. You're not going to get much growth without any profits. And so I think that's a big story in the hog market.
Do you have any concerns about the hogs markets, same like in the cattle markets?
Well, I got a couple of big concerns on the hog market. One is, sort of production and where we are and getting profitable prices to hog farmers. But, I think in the market that we deal with today, it's just plain a market with just a huge amount more uncertainty and uncertainty driven by tariffs because our domestic hog prices are highly dependent on export markets. That's where the growth has been for many years. And so as we talk about tariffs, uh, that's a pretty concerning area, and I think that's lending a lot of uncertainty to the market. The second thing that I think we ought to be concerned about is certainly in the last week or so, a lot more talk about recession, and I sure hope not. Recessions are typically bad for meat demand. Um, it's bad for, we might focus on meats because I'm a livestock economist, but boy, recessions are bad for everybody, most everybody in the economy, and so I sure hope we can avoid that.
Of course, Dr. Anderson. I love to talk about that for next time.
I think that'd be great.
The cash
Anytime.
hogs markets was down for last week in Iowa and Minnesota markets. However, how is the fundamental The cash hogs markets was down for last week in Iowa and Minnesota markets. However, how is the fundamental on trade for the cash hogs markets?
Well, I think fundamentally in the hog market, the cash hog market, I think one thing to recognize is that really since early January, we're sending fewer barrow and gilts to slaughter than we did last year. So our production has been pulled back. Simply, we've got fewer hogs going to market. Now, excuse me, weights have been a little higher than a year ago if we look at dressed weights. So over, let's see, last week we were at about 214 pounds, about equal to a year ago in dressed weights. The couple of weeks before that, we were at 216, about 2 pounds above where we were a year ago. So we're getting a little more weight out of each animal, but overall slaughter is lower. And I think that just reflects tighter supplies, the effect of really fewer sows in the herd, and farrowings and whatnot. I think we're seeing the effect of that from late last year into production so far. So fundamentally, tighter supplies, I think, are boosting prices.
How is the cash hogs weight for this week from Iowa and southern Minnesota?
So far, we've been about, and I'm using a carcass price, but we've been about $90 per hundredweight. I think this week so far we've seen some pressure, certainly some negative pressure on the futures market with some falling futures market prices. And I think, as we all know, those markets are related. They may not be exactly the same, but they are related. I should say, too, we've actually seen some declines in the pork cutout value, or sort of the wholesale value of the primal cuts. We actually touched $100 per hundredweight about 3 or 4 weeks ago. We've since come down. We're about $97.50, $98 in the cutout value as of a weekly average last week. That's still well above where we were a year ago, and kind of moving with the kind of normal seasonal pattern that peaks in mid-year. Same with the live hog prices, but we have come off of the highs of a couple of weeks ago.
It's been up or down for this week about the weights, right?
Right. So we looked at dressed weights. Dressed weights have come down a little bit, and so we're sitting at about 214 pounds on weights, and weights have declined really all year so far since the first week of January, where we were at 218. So weights have been coming down, but that's usually that's pretty normal seasonally that we see some declining dressed weights until kind of now through into, say, May or June, before we really fall off into some summer lows. Heat takes its toll on weights of those pigs.
Of course. If the hogs industry could have some effect on the tariffs, what is the impact on the hogs markets?
Well, I really think, as we think about the hog market, we are big net exporters. We export a lot more pork than we import. And so we think about import tariffs from some countries. I think important in the pork meat market is really the effect of what the retaliation from other countries is, how they retaliate against our exports. And, if we make the assumption that they're going to retaliate on our pork, then, the net effect would be lower prices for hogs in the U.S., because more of that pork's going to stay here. I think it's important to point out, too, and just remind ourselves that we are also, we import a lot of hogs from Canada. And so whether they're feeder pigs or lightweight weaner pigs or that we're going to feed out here, for a long time we've had a real advantage, a comparative advantage economically in feeding and meat packing. We bring in a lot of hogs, and so tariffs on that side would result in some higher pig prices for farmers and producers who are buying those pigs to feed them out here, or for meat packers who are bringing those pigs in, those hogs to go to their packing plants. That's going to raise those prices.
What is the import numbers for this week, Dr. Anderson?
So we just got I tend to look at kind of the monthly data from USDA. On March 7th, we got the latest month's data, which is for January. We imported, in terms of live hogs from Canada, we imported almost 600, well, here's the number, 636,600 pigs from Canada. Across all those different weight classes. And I should point out too that a year ago in January we imported 581,000. So we imported more live hogs from Canada in January of this year than last year, and that's certainly larger than kind of the 5-year average before that as well.
I want to talk about the cattle markets for a little bit with you.
Sure.
Do you have any questions about the fundamental on the cattle markets?
Fundamentally on the supply side, we continue to have the smallest cow herd since 1961. We've got fewer cows, fewer calves, and that leads to less beef production. And that's really the path we're on from a supply standpoint, is less production. One of the real, I think, surprising things in the cattle market, fundamentally on the demand side, has just been how good demand has been from our customers over the last couple of years. We've had record high retail beef prices, and consumers have continued to buy. So the risk out there in the market is on that demand side, and the risk coming from, fears of recession and consumer spending. Beef is more expensive than pork or chicken. And so, beef would be affected in any kind of recession. And so I think that's really the fear on the uncertainty on the beef demand side. But fundamentally, so far, from a supply and a demand standpoint, they've both argued for higher prices for cattle and for beef. And that's what we've seen, is higher prices.
Why we are seeing the high prices for right now than previous years in the feeder cattle?
Well, I think it's related to just plain fewer of them. Our cow herd in the U.S. has been declining in number for several years. And, it's catching up to us in terms of there's fewer cows, fewer calves, less beef production, and yet good demand for beef and for cattle from feedlots and cattle from packers. And it's just keeping prices higher.
Finally, what is your thoughts on the Cattle on Feeds report?
Great. Well, we've got that report coming out in a week from while we're taping this. But in general, I think where we're headed for is placements below where we were a year ago. February of last year was a big month for placements. So I expect placements to be smaller. I think we'll continue that trend of fewer cattle on feed than a year ago. Again, contributing to this tighter supplies, fewer cattle on feed, and keeping from the supply side, some pressure for higher prices.
How feel about the stock market with the feeder cattle?
Well, you know, I think volatility is sort of the word for all of these markets. I saw, at the day that we're taping this, the stock market was up a little bit. Last time I looked, feeder cattle were up like $3 across the board, across all the contracts on the futures market. So we've got an up day going on, but I tell you what, on the stock market, we've had a bunch of pretty bad days. As I look at it and look at my retirement account, I'm scared to open.
Geez. Thanks, Dr. Anderson. I bet you were going to be in the baseball games for this spring, maybe in Omaha for the College World Series.
That would be a fun trip. I tell you what, we have a beautiful day here. This is good baseball weather. Nice and warm in the sun, a little cool in the shade. This is a great day for a game.
I bet Oklahoma gonna win for the SEC.
You know what? Our whole conference, this is a pretty crazy conference. We're just loaded with good baseball teams. Yeah, I don't think there's any easy outs in the whole conference, and so it's going to be an interesting year. I think that SEC basketball tournament coming up is going to be pretty good too. So I'm looking forward to all of the March Madness as well.
True. This is Dr. Anderson from Texas A&M on the Markets Club podcast. We'll talk about the fertilizer markets for today's podcast with Josh Linville from Stonex. Hey, Josh, how are you in Kansas City after the blizzard from last week? It was pretty good, a snowstorm for you guys.
Yeah, it was. We wasn't expecting that. We'd had a couple of warm days, and you really get used to that sun and the warm very, very quickly. And then spring comes, or Mother Nature comes around and reminds you she's still in control. So it wasn't a tremendous amount of snow. I think we only got 2 or 3 inches. It was fairly light stuff, but it was the fact that wind was whipping so hard, it piled it up in the ditches and things like that. It kind of made it tough getting around for a little bit, but just as quickly as it came, it's gone again. And now we're sitting here all this week. We've been looking at 70s, and the sun is out, and we're itching to get in the field. It's time to get the tractors out of the barns and get after it.
Tomorrow is going to be having some severe weather.
Yeah, we're waiting to see where the worst of it's going to be. I know originally they were talking Kansas City might be towards the center of the high risk. Since then, I think they pushed that closer to the St. Louis, Illinois region, which obviously for us it's great news. But you start looking at that part of the world, and you start to get a bit more into the spring anhydrous run and things like that. So it'll be interesting to see what this does. Fortunately, sun's out, and like I said, everything dries up pretty quickly, but that's going to delay things out there. And we need those areas to be running hard and get this fertilizer on the ground, because we miss something like a spring anhydrous run, or if we reduce it, that moves a lot of nitrogen demand over to like urea and UAN very, very quickly. And things are already snug the way it is. We don't need more pressure on those markets.
Of course, Josh. Okay. What is your thoughts on the fertilizer markets for this week? It is $615 for anhydrous for this week.
I as high as that price is, and it is tremendously high, I'm not trying to say in any shape or form that that price is cheap. I don't want the audience getting too upset with me, but when you look at that price of anhydrous and you start to compare it against urea, and especially against UAN, it is a little bit of a discount. And I think some of that is a strategy by the domestic manufacturers and distributors. Um, they see the opportunity. We've got corn acres that are rising, of course, brings nitrogen demand with it. We've got urea prices that have been, elevated. We've got UAN prices that are very elevated and tightly supplied. The road is set for anhydrous prices to rally. But if you step into the manufacturer's shoes, they want to make sure they clear this product out this spring. They don't want any missteps because anhydrous storage is a very finite asset in the marketplace. If you price yourself out of the market, if you miss that demand wave, well, you carry all that product in the summertime, and now there's really not that many places to go with it. Your worst case scenario is you have to shut down that nitrogen plant. And if you do that, that is a horrible situation. That's a conversation you don't want to have with the margins they're making. So, anhydrous prices have continued to be delayed. They are high priced, but I think as demand starts to come, as shipments start to happen, I would not be shocked at all to see more price increases here in the near future.
What is the prices of UAN for today's market?
Well, UAN's been rallying, and more important to me than the price, and again, it's one of the situations, price is incredibly important. Don't get me wrong. I'm more concerned about supply. We've had a lot of factors that have been going in the UAN market. We have had a lot of small production hiccups. None of them major, none of them massive, massive outages or anything like that. But nitrogen production is an inherent high pressure, high temperature, high stress system. It wears out machinery. So these plants go down all the time and we just never hear about them. There's been several of them happen. And together, when you start to add them all up, you turn into a few 100,000 ton of production that's missing. That's supply that's not in the marketplace. You look at our imports, they've been somewhat poor versus the 3 month average. I think July through January, the last I looked, we were about just under 500,000 tons short. Um, you start to look at our exports. Our exports have been very, very heavy as we have shipped stuff over to Europe. It's turned into a marketplace where UAN today is very tight. A lot of folks, across a lot of regions, are sitting there saying, "I can't find fresh product to purchase and ship until April." Others are saying it's closer to May, and so here we are, and we haven't even really gotten into the bulk of spring application, and supplies are already that tight. Prices have been firming, but if this continues and this plays out kind of like what we're worried about, I think there are more increases on its way. And those that wait on UAN for side dress price depreciation, which is a historical normal movement, may not see it like historical normal. If the market is as tightly supplied as what we think it is, the price is able to keep higher longer into the system because if you don't have the product to sell, it doesn't matter. So a little bit of a concern there.
Do you guys at Stonex, what do you recommend for put a call on the fertilizer markets?
The best piece of advice I can give today is that, and I say this realizing 100% where the farmer sits emotionally, fundamentally. The emotion is anger, angst, nervousness. The fundamentals are tight profitability. If there is any profitability, we're looking at the best way to make our payments for the year. That's a rough situation to be making decisions from. It makes us want to sit back and not make a decision, not have a conversation. Now, this market has talked so many years in the past about, oh, shortages of this and that, and it never transpires. And I am not saying this year is going to be a shortage, but supplies are tight. We are raising demand just before spring season. We had a great fall that was late. That gives us less time to refill the system. All of this to sit there and say the best piece of advice I can give you today is have that conversation with your retailer about what you're going to need. Talk to your supplier about what you're going to need. I'm not saying pull the trigger on it. I'm not saying buy it. But the more information they have about what your intentions are, well, they can try and get ahead of it. Or they can sit there and say, hey, UAN, I'm really struggling to find more tons. I don't know if I can meet your timetable. What if we switch to anhydrous? What if we switch to urea? What if we shift our application time just a little bit? Those conversations this year, more than any other that I've been a part of, I think are being incredibly important. I can't do anything about the price. The market is what the market is. but having that conversation gets you better suited to make sure you got what you need when you need it.
How is the fundamental on the markets? Could you tell us about it?
Now they're rough. When you look at the fertilizers, for example, nitrogen, we continue to struggle with Chinese exports on urea being non-existent. European production still 75% of normal. Iran was offline for several weeks, probably lost 750,000 tons there. Global supplies are tight. UAN, same thing. European production 75%. That's removing several million tons. Trinidad keeps having production issues. Phosphate, China exports are 3+ million tons less than what they normally are. Potash, we got to worry about the tariffs. From a fundamental standpoint, fertilizer is much tighter. If we could solve these supply problems, we see price ideas come down, but we just have not seen that anywhere. Grain side, I can't really talk into that. I'm not a grain guy. I only listen to smart people and repeat what they say. But again, it's one of those things where, yeah, the fundamentals on the farm are not great for corn, but it's worse for beans and other products. So unfortunately, we're going to plant when it really comes down to it. We got to put crops in the ground, or it's going to be even harder to make the payment year after year. But yeah, it's going to be a tough 2025. It'd be great to have something shock us and have it be positive for a change.
What are watching for next week about the grains markets and the planting intention report?
I'm just hoping whatever the report says, prices go up. Nothing would make me happier than to see corn up 25, 50 cents, see soybeans up $1. And I know that's probably wishful thinking, but yeah, we'll have to wait and see.
Do you have any questions about this summer and the drought?
Yeah, obviously that'd be a situation that we would need to watch. If you start getting widespread drought, obviously that starts to rally grain price ideas, which would be fantastic for those who are actually able to raise the crop. But we also typically see when grain prices rally, so too does fertilizer. But I would say, from my vantage point, the summer drought isn't something I'm terribly concerned about at the moment. Long-term forecasts are certainly something we watch. That's something we need to factor in. End of the day, accuracy of those things, we'll wait and see what happens. They're right sometimes, they're not. It's kind of like me in fertilizer. I'm not right all the time. So we'll watch. I will say a lot of people put stock into, oh, if we turn into a drought, it's going to kill the corn crop. There won't be yields, won't be there, prices will skyrocket. We've got to remember the genetics of the seed today is so much different than what it was even 10, 15 years ago. Conditions that would have destroyed the crop this year, that crop is so much more resilient. It takes so much more stress to really make a major impact on that yield. So we'll see. And yeah, we'll have to kind of watch and see what happens with fertilizer if those prices do rise because of the drought. But a little early. I want to get through spring first. I want to get this part done.
Do you have any final thoughts on this? Commodities markets with the fertilizer markets?
No, I think we hit most of the points. The best thing I can give is it's more of a plea than anything. Be careful. It's that time of year. You are asked to do a tremendous amount of work in not nearly enough time, and do all this for a consumer that thinks you're trying to kill them. Listen, you've got storms that come across. You want to get a few more things done. You've got events coming up. You want to get things done, and farmers push really hard. Sometimes they push themselves too hard. Now, do that turns to stress, turns to getting tired. Mistakes start happening. Farming is an inherently dangerous profession. So do all the work. I'm not sitting there saying to do anything different, but just be careful. If it means taking a nap for an hour or two to kind of get refreshed so that you don't end up with a tractor down a ravine because you fell asleep behind the wheel or something like that, it's worth it. Yeah, we want to get this stuff done. We want to get spring 2025 done and put behind us. Your friends and family want you home safe and sound more. So keep that in the back of your mind. But otherwise, we'll just stay on top of it.
It is pretty important to get ready for the planting season. I agree with you.
Yep. We'll all have a celebratory drink when it's all put behind us and done.
Some Bud Light.
I'm down for it.
Thanks, Josh. I bet you're ready for Kansas City Royals season after the Super Bowl in New Orleans.
Got a lot of higher expectations. They surprised a lot of people last year, and we're expecting more this year. So here's hoping.
We were talking to Kurt Kimmel from agmarkets.net. Let's discuss about the grains markets for right now. What is your thoughts on the planting intention report on next Monday?
Yeah, it's a good question, and that's probably what the trade will be looking forward to here as we need to find some news to trade off of. The market's been virtually just sideways here, caught in a range, waiting for something to get going here. It's seeing the farmers' focus being towards getting the crop in the ground. I know locally here we have seen some early beans go in, and we've also seen a lot of anhydrous gas be put on here. Guys are fairly well getting caught up from last fall's shortfall on trying to get field work in a good spot. So crop's going to go in early. But yes, on the March 31st plantings intentions report, that's going to be the next issue market maker to look at. Our team went out to Denver there to the Commodity Classic, and they were able to visit with a lot of producers from all over the Midwest. And the number one theme is more corn acres. So I imagine that corn acres is going to be kind of high. We saw the outlook for them come in at 94 million acres. Our estimate's a little above 95 million acres for next 31st report. Bean acres, the outlook for them was at 84 million acres. And our team's just a little bit below that, about 82.8, just a little below 83 million acres. So that's going to be the next catalyst we're going to see. Along with that will be the grain stocks report. I don't know if that'll be a big market maker. Usually the January grain stocks report's an issue to look at because that gauges the first quarter usage and kind of makes up for what we were short or how much we have in storage. But on the grain stocks, we'll see if that comes in within trade expectations and kind of go from there.
Can you tell us about the world supply and demand report from last Tuesday?
Yeah, the world supply and demand balance sheet kind of gives a bigger picture on outlook on the world supply demand balance sheet. You know, the first thing that pops in your head is world demand and how it affects our exports. But on the world supply demand balance sheet, what we're seeing when you look at the report is corn ending stocks are really tight. Wheat ending stocks are fairly tight. Then on the world supply demand balance sheet, when you look at the southern hemisphere, that Brazilian corn situation is relatively tight. Brazil estimates continue to be much lower than the USDA estimates. And so that Brazilian corn might be used up a little bit more in Brazil versus, a big export market. So when you look at that and couple it with weather, like we've been talked about before here a little bit, we're in a situation where Brazil's weather is going to be real critical here as we move forward because they're going to need a big crop to help supply world corn needs. Also on the world supply demand balance sheet, the soybean numbers, soybean world ending stocks are actually fairly high. And so they're before, there's going to be a lot of beans on the world supply demand balance sheet to work with. No real shortage. That Brazilian harvest is wrapping up in here fairly quickly. So that's going to put the focus on the U.S. supply demand balance sheet as we go forward here.
Heard how much of maximum corn acres and the planting intention?
That's a good question. They're dialed in 94, 95. To hear these guys talk, we're going to have 100 million acres. I mean, I'd love to be selling corn seed right now because that's the focus on that. Bean sales, seed sales, that guy's probably going to have to get a part-time job because everybody's leaning heavier on corn acres. How much actually materializes, we're fixing to find out. I've seen estimates maybe as high as 97, go much higher than that. I don't know. We'll have to see. But some of these acres are coming from the fringe areas. And this could be a case where the trend line yield up over 181 bushels per acre might not be achieved. So you got some lower producing ground coming in. One thing to add to the corn acres is, everyone's been aware of and hearing, milo, sorghum exports are zero. China was our main buyer of our milo and sorghum, and they've completely walked away. So a lot of those guys in Kansas is looking at corn, and those acres are a little rough, and that's why they plant milo and sorghum. So yes, it could be an interesting number here on the 31st.
How concerned about the soybean acreage, Kurt?
Well, the future demand export is probably above the acreage, but if the acreage comes in lower and we just have trend line yield on it, we're going to tighten. There's ideas we're going to tighten the supply demand balance sheet up actually quite a little bit. We could take that bean carry out down to 350, 340. And the significance of that is they're using trend line yield of 52 bushels to the acre. So you take 1 or 2 bushels off, you can get that new crop bean carry out down in that twos pretty quick. So less bean acres, less exports, it might be a wash. But the big thing on that bean acres, we need some bean acres to run through these crushing plants to supply some oil needs here. That bean oil need here in the future, hopefully will stay intact.
We were talking to Kurt Kimmel from AgMart. Why does the cattle markets is not taking premium risk for right now?
Oh boy, that cattle market, it's a rodeo. Straight up, straight down, straight up, straight down. We're in a situation where the fundamental news remains the same. We still got some tight supplies. Beef demand is actually strong. This veggie burger movement, I think, kind of backed up a little bit through here. I know I'm doing my part on consuming beef for sure, but also too, the meat sector is seeing a lot of imports, particularly beef out of Brazil. The thing on the meat sector too is tariffs. And right now we're seeing a situation, these tariffs kick in, we're going to have less feeder cattle coming in. So therefore the feeder cattle market's on fire here, feeder cattle from Mexico, that is. And so they're really, really going to be sensitive in here, probably a little overbought, but the beef market should stay fairly firm. A side note, I guess there's some investigation going that the Mexican cartel is importing drugs through feeder cattle. So I guess feeder cattle is worth a lot more if they are truly importing drugs through feeder cattle.
How about profit taking, Kurt?
Profit taking, yeah, we could be in a situation when there's opportunity to take profits because the market's kind of stagnant. You're going to have sharp up, sharp down. So there's going to be some profit taking take place. We'll see if profit taking takes place here at the end of the month, particularly from the funds. We saw a little bit of their liquidation in their long position. We'll see how that fund position unfolds here as we go forward in here. But if you take a little out of the middle, and if your farming operation shows profit, go for it.
Do you have any final thoughts on this spring season?
Yeah, hopefully we'll get in the field safely. As dry as it is, hopefully a lot of this dust will stay put. But I think this spring season into summer, the market's going to be really volatile, and this thing could rally quite a bit or break quite a bit. And so, what we've been doing to manage the marketplace is to come in and put some price floors in. That way, you know what the downside's covered and it leaves your upside open. So I think you got to be flexible because a lot of balloons in there, a lot of moving parts, and we're going to see a lot of volatility as we go forward, Caesar.
Thanks, Kurt.
We are quite welcome. Enjoyed visiting with you again.
This is Kimmel from agmarkets.net on the Markets Club podcast. Thanks to Dr. Anderson from Texas A&M and Josh Linville from Stonex, Kurt Kimmel from agmarkets.net. This has been the Markets Club podcast. I'm Cesar Delgado. You have a great day.